This how-to video guide does not constitute financial advice and is purely for educational purposes. Members of Subverto Trading Club may or may not have exposure to any of the crypto coins or NFTs mentioned. You should always do your own research before making financial decisions and follow the mantra of caveat emptor, buyer beware. Enjoy, guys.
Long time Subverto fam, welcome to another weekly market review. It's the 3rd of July 2023. The crypto market gods have been very kind to us. TradeFi has been doing great as well. Let's see how July can end up progressing. Let's start with the total market cap on the weekly time frame. And I just want to very quickly first show you the yearly pivots, because that's the study we made first of all to get great timing and levels for the first correction that we did end up getting. But I just want to show you the progression of the market, its relative strength, and what to eventually look for. So you see the 2015 consolidation. Okay, this is when crypto is nascent, guys, at 2 billion market cap, right? It's a ghost town, nobody is around, and I mean everybody who's here is really early, right? So me myself, I got in 2016 over here, so I missed this bottom, but I got this massive run up here. But you see what happened over here. We had a whole year below the yearly pivot. Because the market was strong, it still did make a break up from the yearly pivot to the yearly resistance zone, and then very importantly found support in 2016 at the yearly pivot. Okay, this was the key before the run up. Okay, so you look at what happened in 2018, 2019. 2018 we came up to the yearly pivot, got rejected, smashed even below the support zone, right? But the consolidation here, what happened? So we tried 2 or 3 weeks to climb over the yearly pivot, got rejected pretty strong. You look at this correction, it's a 55-56% correction, guys. That's not a small correction by any means, right? And after that, what we got is a bit of a run up. Of course, we got the COVID false breakdown, on that big fear wave. Absolute king of an opportunity before the next run up. But very importantly, where did we get the confirmation? Once we reclaimed the yearly pivot and flipped it into support. We had a good 4 or 5 weeks sitting on the yearly pivot, and really, the rest is history. This is where the market really matured, because we built a new floor at 100 billion after the previous floor at 2.5 billion. Built a new floor at 100 billion. You see, very importantly, how price functions and how price reacts. So the next the next rejection that we got, after we had topped out, the next rejection that we got, we were again significantly below the yearly pivot, right? And of course below the support as well. The yearly pivot, the first support level. Now we've made that run up to the yearly pivot. You see how the market starts to get weaker. See, the first time, this first yearly pivot where the consolidation was, price did actually just break out and flipped the second yearly pivot into support. So right now, and the previous consolidation in 2019, we got a rejection. For now, what's happened is the rejection this time is not half as strong. It's just a 21% rejection. But you see, the market cap is huge now, guys. So in terms of what to expect for upside and what happens, you best be prepared for much lower volatility. Like I mentioned before, not expecting something too extravagant in the next cycle, guys. People are going to be thinking about 100k and whatnot, to me I think it's a genuine possibility that we don't hit that. Anywhere between 3 to, I'd say, 4 trillion. This could be the potential upside for this market. Still, that gives a massive opportunity. Where we are at the moment, if you think about the high beta crypto coins, this is better than most opportunities. I would say the focus should still be on AI. So you should do your research, because all across the board, that is going to be the narrative that is going to take markets to the moon. But for now, we've got that rejection from the yearly pivot. Gonna go down to the 12 hour now. So we got that rejection from the yearly pivot. What was it in confluence with? This consolidation up here. So what this shows is that the average consolidation over here, everybody over here is a seller, still a skeptic. You see how the market instantly rejects from this anchored VWAP, which is the consolidation anchored VWAP from the beginning of last year. Alright, we still have a long way to go before we can hit the VWAP from the all-time highs, the anchored VWAP from the all-time highs. That is at the quarterly level, it's sitting much higher. But for now, like I predicted before, what I have been thinking about is a potential new range, and this range could genuinely last for a significant period of time. I'd say till the next yearly pivot gets printed, and then what we can look for next year is that confirmation after the next year's yearly pivot flips into support, and that's when we can be confident that run up is coming, that big money move from 1.2 to perhaps a 3x. The market can do a 3x. So that's giant, guys, for the crypto market, for all the value that it provides. I think it's pretty massive. In terms of the upside gains, I mentioned before, this was the place to get into. You saw me getting in here, and then I did get a bit of a fake out, but I got back in pretty heavy once we made this move up, because we were looking at what potentially could happen, looking at slightly lower levels, looking for confirmation of structure. We got that here. This is where I got in fully at 75%. So I'd say, guys, the early parts of the move are over. Now, if you're trying to get into the market now, I'd say it's full FOMO, guys, because I don't see how much upside there is and how you would manage your risk. Because when you get in late, once the market has done what it's done, you can get moves like this. Alright, so this was for all the late comers, this flush out. How many percentage? This is for the total market cap, right? But if you look at alts, what they did on the same move, it was pretty big, 10, 15, 20%. Basically flushed out everybody who's on leverage. And this is where I told you, if you have to get in on leverage, this is the place to get in. If you got in good coins, this flush didn't mean anything. So now you're safe, your position should be safe, managing risk from these lows for now, potentially getting another flush down before a move up. But like I said before, this monthly pivot and this monthly open, this big support zone over here now that's developed, we actually in fact didn't even touch that green box, and that's why you saw me get in early, because I could see the buying strength manifest at last month's monthly pivot. So I'd say this for the future, this becomes a solid support zone. We are unlikely to test it for now. I'd say these tops are still vulnerable, so at some point I would not mind a visit to 1.14 or something like that. But now there's a slight complication, guys, when it comes to the total chart, because alt BTC is moving so much and Bitcoin is relatively stable. This chart means slightly less, so we are going to look at the total 3 chart after this. And the total chart, I basically wanted to talk about the yearly pivot study, and that's the main reason why I opened this chart. but perhaps we can do something like this and then build some more structure, because this is going to just range out now, guys. I mean, it just genuinely makes sense for the market to just range out over here. And of course, what that means is, look at where your upside is capped. It's not too much more left, guys. 4-5% on the total market. I'd say for altcoins, downside potential, it is much higher than what we have for the upside. So you have to be very careful. If you're looking for swing positions, to me that opportunity is gone. It's over across the board. For stocks, for crypto, your swing trade is gone. Your swing trade was here, your swing trade was here. That is when total 3 was back down here at the lows. That opportunity is gone. You missed that train. Will that opportunity come again? Yes, perhaps it will. We got that flush during COVID as well. So there is eventually going to be a flush, but it's hard to time that, guys. And when you do end up timing it, the objective is to capitalize on that opportunity. You're not gonna get a high time frame double bottom on the crypto market potentially ever again. For the next 3 to 4 years. So when we did come down here, this is just what I was preaching. It was just a fantastic place to really be looking to take risk. Whoever's taking risk now, I don't know what they're thinking and for what they're thinking. If I want to really feel like I need to be risk on, I need to see a few weeks of price sitting above this 1.26, 1.27 trillion. A few weeks. We can fake out, we can spend a week or two. If we start to spend 4 or 5 weeks and we start leaving up, then yes, perhaps the market is stronger than what I feel it may be. But does it have the legs for it at the moment? I don't feel so. Because market needs time to consolidate, guys. Bottoms are not just formed overnight. This is a great bottom structure. It's nearly been a year, but is it enough? Historically, history tells us no. History tells us it's not enough. It takes more time than that. And look at that, 670 days. We don't have it, but since the bottom, I can tell you, when did the market really go parabolic? 560 days, 670 days. So how many days are over right now? About 400, about 400 days, close to 400 days. Is it done? I genuinely don't think so. The consolidation, the time for the consolidation should exponentially increase. So we should cross the next halving, guys, before something happens. 600 to 700 days. So we still genuinely have another year of sideways. So what does that mean? Gonna switch your charts off? There are better trending assets, I would say. Look at the AI stocks, they're still going to go, guys. It's just the beginning for them. Don't think that this is over. This is just the beginning of a big technological revolution. It's going to drive the next big bull run in the space of capitalism. So this is what is going to drive it. This technology is going to absolutely change our world over the next 6 to 8 years. So for now, for the next few months, I'd say just be cautious, guys. You have to manage stuff on the lower time frames now, and that's what I'm going to be doing with my margin trades, and I'm going to see how this higher range pans out. I'd be looking to sell some spot as well. I am 100% in, so I got in 75% over here, 25% over here. So my average is pretty damn low. So I'm perfectly okay right now, being just sitting in my spot, having this margin trade to play out however it needs to. But I'd definitely be looking to take profit on partials and see how this range pans out. Alright, so just keep a lookout for that. In the mid to near term, I'm just expecting the market to spread out, range out, and start to just take out people who are looking for new breakouts and looking for overtrading this market. Looking at the altcoin market, total 3 without Bitcoin and Ethereum paints a totally different picture, right? But look at that opportunity, guys. Look at the opportunity that we got. Such a nice structure, such a clean double bottom. Collectively, we are 14 to 15% up from there, but it could end up being more. It was the same for December. We got some mega gains, guys. Feb was where I was out of most of the market, and then took quite some time to come back down. But yes, this was the opportunity. Congrats to all those who remained objective enough to play it, because I'd say if you did not, it looked like another one of those in hindsight. It's just strange. I don't understand why would anybody do this when you have good places to manage risk, when you can understand market structure, when you can understand fear and greed, why you need to let go of those principles in the moments where it matters the most. Can we come back down? I don't know. I don't know. Can we go back up? Can we come back down? But levels are levels. This was the yearly open. It held up, guys. It held up pretty good. I think this is 2022 yearly open. Just mark it out correctly. Yeah. So where do we go? One very important thing. Can you see this anchored VWAP? So look at how neatly we are rejecting. It's a very key level to my mind. For this market, if we can flip this into support, I'd say this is my line in the sand for this market. It's because it's just so good. Historically also it's been so good. Look at it. Look at it in the last cycle. We flipped it into support cleanly. This was actually where we flipped the yearly pivot on total on support, or perhaps it was this, I'm not sure. But it's really great confluence to have over 2 charts, right? Very, very good confluence. So this anchored VWAP is actually from July 2017. It would have the same results from September 2017. What it actually signifies is the entire altcoin consolidation from once the market hit this 20-25 billion mark. We spent a lot of time here. There's a decent amount of information supporting this anchored VWAP, right? The other anchored VWAP I got is right before last year's run up. This was a very significant point in the market and actually supported price the last time as well. So I'd expect this in confluence with the yearly pivot perhaps to serve as resistance at some point in the future. So I'd say that is the key zone. Outside of that, how this new range plays out generally depends on alt BTC, because I would suspect that once BTC does flatten out and the market starts to get confident about Bitcoin stability, then altcoins could do something again, and perhaps come back up to this zone, 370, 380. That would be really nice, to get this trade twice, because again I don't think that would be the end of it, and would get another opportunity to buy. Perhaps not at the same prices though. I'm not confident we can come back down to the yearly open again, but I would genuinely want to be a seller at least once more at this level. And that also partials, I'm just gonna hold all this, guys. I'm not gonna try to second guess the market. All the trading education and experience that I have, it culminated to making these buys that I have. So I'm very confident that at least half of what I've bought here, I just want to put it, I'm just putting it away. I have no reason to do anything else with it. I'm putting it away for 2025. Simple as that. I feel it's a great trade. And the rest of it, yes, I do want more gains. So, the trading knowledge and understanding of levels is going to allow me to accentuate that with part of the portfolio. But at the very least 50% of it, now I'm just holding. It's not going anywhere. So let's see how that pans out. This is the game plan for total 3. I genuinely want to unload again, higher, above 375 billion market cap. Looking at Bitcoin now, and what do we have? We have some key VWAPs, some key anchored VWAPs, one from December, one from the lows here, November 2022, and one from where potentially the market has started to consolidate. Right, that's primarily the information we have. Outside of that, yes, this distribution range, I've drawn out an anchored VWAP for this distribution range, at 37K. And what else we have is the anchored VWAP from the highs, right? That's the one that had been providing resistance. Currently, we've broken above it and flipped it into support. That's not so bad, that's not so bad. But I'm gonna give significance to those big levels that I spoke about on the total and total 3 chart. For BTC, we have this big volume range over here, which was potentially the distribution range, up here. So the low of this range, this volume range, it lies at 32,270, something like that. So I'd say potentially the market can top out somewhere here, within this zone from 35 to 32. If it does have to get to 35, because I'm not completely sure, and genuinely considering what BTC has already done, I'm not overly interested at the moment. Guys, if you just look at all the gains from the past, whatever size you are, don't see what sense it makes that if you are well versed with the crypto market, you want to be overly trading this asset. It's much better fish out there, to fry, whether you play leverage or spot. But still, nonetheless, Bitcoin is king. Bitcoin is driving a lot of growth into the market. You can see where money is entering. Look at all this big volume spikes. This is interest, right? This is where the market was really getting smashed. But you see where the big interest was in the market, and then it completely died out, and then we started to get interest again. So that's why I pulled out a VWAP from here, because this is where somebody saw that, okay, this 30k level is gonna get taken out, and I'm gonna start entering the market. Of course, there's dumb money exiting as well, but somebody's really buying the hell out of this, right? So I've got an anchored VWAP for them. This is the this is the smart money. This is the smart money average, 23k, 23,200. I'd say anything close to this, getting an entry into the crypto market while BTC is at or below 23k, it's going to be incredible. I don't know if we get a opportunity to do that anytime soon. I don't think so. If it does have to happen right now, it's already done what it had to. The market's already had that fear wave, max FUD, all that's already happened. Now it's time to get the market overconfident, get people bullish, trap them. Once they get tired, then smash everybody. So that next move, once everyone gets tired, when nobody's ready for it, perhaps we have to see where this anchored VWAP averages out at that point. It could be at 24, 25 as well. So I'm not sure if we're going to go below that, but yes, this is just going to be a great place in the future whenever it does, if and when it does come. Until then, guys, the game plan is the same. Stick to the levels on the total market cap and total 3. And for now, I don't have any place for the long side. To me, those are done. It's more about looking at and finding places where we're going to be booking profit. And for that, at the moment, just needs patience. It's going to be a bit of up and down. So just need patience right now. We're looking at also against BTC. It's showing a great picture over here in terms of opportunity and what has potentially happened. What I'll do is first I'll just hide large caps and mid caps to look at the sector that is hot at the moment. The last 2 weeks, the hottest sector is DeFi, and you just look at this, guys. Where do we top out? It was 2021. I think the actual top for DeFi was in August 2020, right? So that is nearly 3 years ago, and we built out a distribution over 2 years. We built out a distribution. So 2020 and 2021 was a distribution for DeFi BTC, which ended up in a 2-year downtrend. It's straight down for 2 years, guys. If you even look at this, May 2021, and now we are at June 2023, straight down for 2 years. Of course, we have a bunch of sideways over here, but this is a heavy downtrend. At least a 90% drawdown, not in USD terms, but in BTC terms. So that's huge. Generally, Bitcoin pairs for indices shouldn't do so much, but it has done that, and now we are at a potential place in price and in time in the market where this can not only stabilize but give you a potential long-term opportunity, which would mean this DeFi BTC pair in its long-term opportunity, it could come up all the way here, which is a 2.5x from where it is, because this is the index, right, guys? This is all of these coins put together. So what happens with DeFi? There's actually a ancient coin in this which I have to remove. Ample. The rest of them are pretty solid. It's a good list of DeFi coins. I mean, you can debate about Wi-Fi and sushi, but anyway, it has some of the major coins in it. And if you look at it in that sense, I would say, guys, that this has the potential now to flatten out over the next year and a half, and then make its move. How far up it makes it genuinely depends on the price of BTC. But if I would say, if this goes another 2.5x and BTC itself is another 3x or 2.5x from here, 2.5x is more plausible to me, because this is my Bitcoin target, guys. 70 to 75,000. That's my Bitcoin target for the next cycle. So if we get a 2.5x on this and 2.5x on this, so that is significant. That's going to be significant gains. Individual coins, even the larger caps, they can do 6 to 8 to 10x from where we are right now. So I'd say that those are great gains for the next 2 years, over the next 2 years. But don't get in blindly, because many coins have already done a 2 to 3x. And with all altcoins, you have to remember you should be prepared for at least a 20 to 30% drawdown, if not more. When they move well, they do drop down even 50%. So you have to be prepared for that. When you are even playing the spot game in crypto, you have to be prepared for that, even if you find incredible places to manage risk. When I was getting in the crypto market, the total 3 double bottom, people were asking me, what's going to happen? And I said, I don't know. It looks like a double bottom to me. It's potentially looking like an absolutely great opportunity, and I'm okay with thinking about taking a bit of a drawdown if it does come. I don't have any problem with that, because I'm looking at these kind of gains. I'm looking for a 8x 10x on those coins. So why can't I take a 20 to 30% drawdown when I don't need that money? My money is locked into the market, but it's relatively low risk once the market has done this. I'm not gonna smash my entire portfolio and not consider what I have to do with it, because over here that drawdown could manifest into another 80 to 90%. But once it's already done that, once it's already made 90-95% drops, it's had the time correction, it's had the alt Bitcoin correction, technically it's forming something really, really fantastic, then I am going to do that. Right? So that's the difference between FOMOing here and FOMOing here. Okay, so that's what it is right now, and this is where I see this is how I see potentially alt BTC playing out, that we are reacting from what could potentially be a major low in the alt BTC market as well. And once BTC does range out, I'd expect this ratio to again improve, but then eventually build out some kind of structure for us. Because what I would say is, it can get a move now and Bitcoin can stabilize, then it drops down along with BTC, and then it drops further when BTC makes that move higher in 2024. Alt BTC should get smashed, but eventually for the last hurrah, everything should just move. So that's the game. But this just looks like could have been potentially a major bottom, guys. So just watch out, because even in terms of time, it has been genuinely been a significant amount of time. In crypto terms, this has played out its full cycle. So now it's time for it to balance out and eventually move the other way. So when it does that, this is when we want to know and find these places and get in early. So that's what we're doing. So for trade 5, we're looking at some long-term statistics, and we're looking at the NASDAQ Fractal. If you've been with me for a while, I've been following this actively, publicly, I think since 2020. But I actually used this as confluence to call the COVID crash as well. So this is quite an incredible fractal. If you've been around, you've seen it a few times. But you can just look at it. Just look at this. Just look at how well this is moving, and look at how well price has been moving along with it. Of course, the corrections are exaggerated. Look at this: a 16% correction translated to a 24% correction, 18% translated to a 32% correction, another 18%, nearly 19% correction, a 35% correction, and now we're moving again. Right? And what do we see here? So we have potentially, once we're reaching the highs, we have a whole bunch of sideways. This is actually coming in line with what we have been thinking, because I am projecting that once we do kind of exhaust this move, we won't have a very deep correction, but essentially 3 months, 2 to 3 months of sideways, perhaps end of October or November, we'd start moving again, before hitting the next resistance levels. For that, we have to find other methods of confluence. We can't just use the fractal on its own to find that. But essentially, you see how well the fractal has been moving over the last decade. You can even see the big crash. So this is actually the fractal, the NASDAQ fractal. If I hide these, you would likely see it better. This was just for reference of the kind of corrections that we've been getting. But essentially, this is what it is, guys. So I hope you like it. I really like it. I think it's quite a great simile. If you want to see what's happening after the 2 or 3 corrections, we're really going parabolic. This is getting close to the parabolic phase of the cycle. So we should be having I'd say 2, perhaps a couple of years of regular market conditions, or a year and a half of regular market conditions, and after that something special and exceptional. I truly believe AI can trigger something like this over the next 4 to 5 years. We should expect this to top out potentially 2028 to 2030, somewhere around then. I don't know what leads to this. I genuinely don't know. Or whether this has to happen, or whether this has to happen. But as of now, I'd say this fractal has been moving very well. Within the bounds of what was happening 20 years ago. So it's very interesting, and I'd say we are somewhere here in terms of where price could be. So heading for that potential sideways, but that sideways can last for quite some time if you negate the move up and the move down. Almost a year matches up with a year of sideways for crypto before we start to move again, and we move in a big way. And what I would say is that if this is what the risk on markets for tech have to do, I don't know how it has to be for BTC over the next 3 to 4 years. Maybe it is supposed to break its cycle, or it may just begin to underperform AI, and AI just takes center stage, and all tech that is supporting AI processors, and all the hardware and the software, everything that supports an AI based ecosystem is what manifests this move. So keep a lookout for this, guys. I think we're in for a big way over the next 4 to 5 years, with absolutely fantastic opportunities in the market. Now we're looking at NASDAQ seasonality, because owing to AI and a lot of tech-based companies that will be benefiting from it, you can see we have 3 weeks in July that look like they could be really good. They're potentially bullish weeks. After which, yes, we do have slight bunch of sideways, with August showing a strong sell-off. But outside of that, the coming 3 weeks, which I believe other seasonality as well points to us having a tailwind for stocks and risk on assets over the next 3 weeks. So I'm still long with my earlier positions, even in TradeFi, and I would be looking to minimize my risk after the next 2 to 3 weeks. So let's see how this seasonality in TradeFi pans out. Here's another important chart, because we've had a very, very good first half of the year. S&P greater than 10% in the first half, and this is how the rest of the year pans out. Again, it still does point out, no matter how strong it is, after the next 2 to 3 weeks, still there could be a bunch of sideways all the way till end of October, or if you bottom out here, you'd consider mid-October is where the market starts to get bullish again. But again, then just remember, take this with a pinch of salt, as this is common information, and something that's common can be used against us. So just keep a lookout for this. But I still say seasonality has been working very well this year, and it is significant, this chart. So for commodities, a lot of commodities are in an interesting place. I'd say to have a look at the gold chart. There's not enough time in the review left for me to just cover everything. I will cover the commodities index. Oil has manifested the entire scribble. For oil, if you can go back to some of the previous reviews, in fact, even just search in my Discord channel if I've covered oil somewhere, you will find those scribbles. It has manifested those scribbles to the downside, and so has the commodities index, because this is the scribbles that were drawn in August 2022, and this is where I told you is a great place to manage risk for downside. We've manifested that downside move, and now we have to see where we go next from here, because you see on the monthly time frame, we have built up that correction. If you really want to be bullish, guys, you have to flip this 272 back into support. Otherwise the market, if this level is taken out 251, I'd say we have a lot of significant potential downside. Starting with likely this level right here, 227. Let's just very quickly pull out a fib, because this was a giant move, guys, and this is a very bullish retrace. I'd say if we reclaim this the market and the world could be in danger, guys, because unless we start to range over here, and this is distribution, this could end up being a dangerous big run up with a potential correction and then a continuation, in which case the Fed and the rest of the market is really going to head into trouble, because inflationary concerns will not be quenched. So let's see how this pans out. It's a very important chart, and I'd watch out for this 272 level and see if it can be reclaimed, or we can just drop further down and head down to this 0.5 and 215 zone, because that's what I really like. But this was a very, very strong and bullish move, so I would not rule out a reclaim of this monthly level. Just keeping an eye out on this very important chart.